Okay, so we can entertain questions and your experience on the last week trade. So we can review.
Okay. Okay. Firstly, I would say I've created the account on the
FSTM.
yes, FXTM.
Okay.
Though I was not able to install the MT4 on my laptop, but it's working on my wife's laptop. And, I can only log in on my phone. The MT4 on my
Okay, you can log on your phone.
yeah.
Okay, well, good.
Yes, so that's the challenge I've been battling with. But my wife has been busy making progress on the analysis of trades, and so she will share her experience and questions she has to ask. Then I think for now.
Okay, I want to get the challenge you're having on your laptop MT4. Is it because your laptop is down, or is that you can't access the site? You know, I gave you another link on how to open the site, how to open the website.
Yes, the challenge is that the iOS version is a challenge.
So it doesn't
The
open.
iOS version, yes, it doesn't work. It's the same installation or a file. I discovered that on MacBook, the installation file that we downloaded is .pkg, which is package. But the one that works with my own, it's I think another file extension. But it's because mine is higher than our own. I'm using Sequoia, she's using Sonoma. So I think that's the challenge I have
So
read about.
what you do, you can Google out how you can fix it then and how you can download it.
Yes, I would. It's been on. I'm not giving up on that. I would. I
Okay.
know things like this I can be very happy about. Get it?
Okay, so she's able to download the MT4 on her system on her laptop right now.
Yeah, I'm the one who installed it on a laptop and
Okay,
it's working perfect.
is it from the FSTM that downloaded the MT4?
No, I think it's from Meta 5.
Okay. The one
Meta
from
site.
Meta Coach. Okay, the
Yeah.
one from Meta Coach.
Yes, Meta
Okay,
Coach, yes.
okay. You see, they said it because what this company do that is a Meta Code that developed the MT4. So they only brand it to the company's the logo. So once you download, the logo will change to the company's logo you are using, but it's still the same MT4. And with that one, you can still log in your account today too. So it's still the same.
Yeah, that's correct.
Okay. So was she able to do the trend line, this and that, and then does those plugin errors better on the MT4?
He's asking whether the bucket errors on MT5 you still experience it on MT4. Or what's your experience with the MT4?
Yeah.
So over to her.
We feel that the MT4 was better because there are some stuff we normally see on your screen. We're trying to achieve that on our MT5. We didn't know that those stuff came along with MT4. So now seeing them on MT4, it's way easier to do the analysis the way you were doing them on your own.
Okay, beautiful. As I said, for me, I am more comfortable with MT4. The only thing on MT5 I see is just like different time frame versions that you can do other time frames. But MT4 will give you 1 minute, 5 minutes, 15 minutes, 30 minutes, 4 hour, daily, weekly, and the monthly, which is still okay.
Yes.
So then on your gold buying, do you make some money before gold start coming down again? Or you were trapped?
the gold.
Yeah.
Did they use the
I think it was BTC I did. I didn't do good because gold messed us up sometime. We gave that one a little
break?
Okay,
break.
on the BTC, do you make some money before BTC pull back? I know BTC pull back this
Yeah, it's pushing back.
Were you affected? Were you caught up also?
No, I wasn't. I made some profit and a little loss. Though on demo, not on
It doesn't
my.
really matter life or devil. The most important thing is the consistency in your strategy and the consistency in making the profit, because that's the key thing there. If it's not consistency, there's still a problem. So what we're working towards is that consistency, minor losses, bigger profit. That maybe if you do 10 trades, you have like 7 wins and 3 losses. That's good.
Mm,
Do you
yes.
understand?
Yes.
6 wins, 4 losses, you are still better off, because at the end of the day, you still come out with close to 20% also. So that's what we're looking at. So market is a bicycle that goes up and down. When you are, if you're riding bicycle, your legs goes up and down. So market swings. And as we
That's
keep saying, is that if your decision is that is going north, and then do you make money while it's going north, or did it cut you up in the south and before going north? That's the only thing, because the one thing lies that a decision must be taken at a particular point, which is a level. Any point you are taking a decision in a market, you are taking a decision at that place as a level. Then will the market go up to favor you if you are buying, or will it go down to favor you if you are selling? So anytime you open an order, that place, what I'm saying is that it's to widen your horizon of reasoning. Once it widens your horizon of reasoning, then you can understand it more. All these things we are calling support and resistance, they are all arbitrary levels. Somebody can say they exist, and someone can say they do not exist. They are all arbitrary levels. I don't know if you're getting what I mean.
yes.
Because where you open an order, we're not doing analysis now, we're just having the discussion. Where you open an order to buy, that particular point open order to buy is just like your support level. It's a horizontal level at that particular point. And where you open order to sell is also like a resistance level for you. So you see that's why we say that the market reflects an aggregate madness of people in the market. People who are confused, who are not confused, people who are manipulating and doing a lot of things. That's only thing you are seeing in the market. If you have this mindset, then you can understand it. If you want to buy, are you joining the congregate of people who say the market is going up? If you want to sell, are you joining those people who say the price is too high, they want to sell? So market is already in equilibrium. The higher the demand, then the market is likely to go up. The higher the supply, the market is likely to go down. So at what point are you entering the market? So you see that even when you are navigating to different time frame, you are taking an assumption that, oh, I'm trying to find out maybe a better place to take a decision. So that's why you keep saying this level, keep changing. So it's a dynamic levels. They are dynamic levels. They are not fixed. The market can come through those levels up and down. I don't know if it's coming clear.
It's yes.
So when people are looking for like a holy grail, looking for a perfect strategy, there's nothing like a perfect strategy. Tony, in this your house, remember we said something like that. In your house right now, somebody want to predict your movement. Is it possible? If you stand up where you are sitting down right now,
Not possible.
can somebody predict your movement?
No.
So that's market for you. So in as much as you cannot predict the market, remember that as you are standing, people might think you can go forward, you can go backward. You may decide to rotate. You might decide to jump. You may decide to do anything there. So that was it becomes difficult to predict your movement. But someone would think that they can either go forward or go backward. What or sideways? What or slant ways? You can do a lot of acrobatic, something within that spot you are staying. That's market for you. That's market for you. And the more you are moving down to the lower time frame, the more unpredictable the market is, the more noisy it becomes. Then the more you are going to higher time frame, the more stable it becomes, but yet it does not ignore the micro events of the lower time frame. So that's why it becomes difficult. Even when somebody asks you what is the best time frame to trade, people will come up with different stories again. So the question at the question is at any point is that if you are joining an equilibrium, the price at that particular time, what will happen? Is there a way you can predict the demand and supply and where the equilibrium will shift? So that's the whole thing. So you see that that's why it's easy for somebody to make maybe 5,000, 10,000 in the market easily. But the more longer you stay in the market, the more likely you may even give back everything you have gained. Do you know why?
No.
The reason why you may give back everything you have gained is because of that equilibrium nature of the market. Because a lot of decisions must have taken place in different time frame. Remember that when you spot a bullish engulfing, sometimes those bullish engulfing will be messed up again. So why did it mess up? Because that engulfing that happens is already a history. You know, candle print history for you. Whatever you see, candle is already a history. Madam, you understand?
Yes, I do.
It's already a history. So the history is printed, which is like a crypto. This people say cryptograph. It's already printed there. It cannot be deleted for life. It's there. You cannot reverse it. The transaction has been sealed. You know, when people are talking about cryptocurrency, blockchains, talking about the transactions that are sealed, this and that, you cannot revert it. All this graph you are seeing is a transaction that have been sealed that cannot be reverted. So you cannot go back to these charts again. You cannot reverse everything you have seen. They are there for life, just like our character now. God is recording our character in the book of life or book of death. You cannot reverse it. So every day. So if we have that understanding of market, that everything that is happening, all the madness, all the transactions that are taking place in the market, buying and selling, is recorded. So you study the history. So you are trying to use the history to predict the future. So what are you doing? So all the strategy you are doing, the moving average you are imposing, the trend line you are imposing, the support and resistance you are imposing that when market get to this level within a given time. So what happens? The market will decide whether it will get there. Once you get there, to print out the level again. So your signals are trying to give you the dominant force in the market, which is what we are studying. And that's because until you narrow this thing down to bullish engulfing and bearish engulfing, there's nothing again left in this market. These are the only two signals you are looking at for in the market. The bullish engulfing, which is the buyer's dominance, and the bearish engulfing, the seller's dominance. So if you can spot accurately the dominance force of these two people, then you follow them, then you take an advantage of the market. Is that clear?
Yes.
Yes, it is.
So that's why we are now saying that some of the dominance force will come from break or structures. Because if the markets are printing and they're developing into a gigantic structure we are seeing right now, this is daily time frame. So you see, this daily time frame, we're able to bring out a gigantic structure because it is a composition of what happens in 4 hour, 1 hour, 3 hour, 2 hours, 30 minutes, all the whole 24 hours activity. So there's a lot of structures that have built up to give you one gigantic candle you see on the daily time frame. So that means that daily candle is composed of multiple structures, which make it to be more stable. So based on that stability, then we can pick up points, which we call our coordinate point. It says, okay, that if at the end of the day, the whole information that composed to give us these stable structures, then if market can break a particular, point where we define as a level, something is going to happen. So that what brings about the support and resistance levels in the market. That what brings about that. So what you are now trading is where the buyers dominated to form what you call support, and where the sellers dominated to form what you call resistance. So if you pick those points and define them, so what happens that if there are going to be a shift, market shift, that means there will be a stronger force that will break that barrier. That's why you call breakout levels. Are you with me?
Yes.
So now let's take this in, for instance, that now what, because this will help you so that you will not start chasing indicators. I chase a lot of indicators. I look at a lot of theories and I look at a lot of things. But at the end of the day, it still come back to the same point. Two dominant factors, which is support and resistance, or the trend lines. Now, as we say that, so if I pick two specific points, for you to understand that thing we are doing, if we pick specific points in the market, so we can hold those specific points and begin to look at the forces that is happening inside that point we pick, which could be a channel, which could be a support and resistance, and we are waiting. Remember, the market will pay you for you to wait. And while you're waiting is to get a clear direction. So it's not about your daily target. It's not about your weekly target. It's not about your monthly target. But it's about you getting clarity so that whenever you're taking decision, you can easily see why you're taking that decision. You can easily see why your decisions may be right and why it may be wrong. I wish this is I'm saying today that if we can incorporate it and we're discussing it, then we'll help each other to become more profitable in the market. Let me pick a specific example. Then we can look at it on the chart. Now, you see this fractal that appears on the daily time frame.
Yes.
It's multiple, it's plenty.
Yes.
What does this fractal represent? We said it gives us that there's a specific information that comes into the market. Because it tells you here, on the fractal support, tells you there's a lot of buy orders that comes up. The fractal resistance tells you there are a sell orders that comes up. Are you saying it? But
Yes, we're saying it.
the question now is, where will the market go? You could imagine you come to 1 minute time frame again. This is 1 minute. Do you see that it said multiple orders? Can you distinguish between daily time frame and the 1 minute, except you are told? See, you cannot differentiate.
Yes. No differentiator.
You can't differentiate except you are told because it's send information. The open, high, low, close. That's the information. The market must open at a particular time, go to a high, go to low, and close. That's the four informations the market prints, and that's what you are seeing in form of this candlestick. So you see, you can trade any time frame, even 1 minute time frame, depends on what you are looking at for Mr. Tony. If your interest is that you want to be making $1 or 3,000 or 2,000, you're okay with it, you close and you go out. That your interest to make like 10,000. And it says, okay, if I can do it 10 times, that means if I make 1,000 10 times, I made my 10,000 out of the market. You can still go to 1 minute and do it because it's send information. It may be noisy, but what are we doing? And that comes to your strategy. So it depends on. So if I come here, this is 1 minute chart, okay?
Okay.
I said, okay, since I said that market operates in a channel, remember one of the things we say, market operates in a channel. You did remember that statement?
Yeah.
Yes.
So now if I say market operates in a channel, my business is to let me capture this market in a channel and then see to trade the breakout of the channel, because that breakout of the channel means that if there's a strong momentum, it can break upward. If there's a strong momentum, it can break outward. That's an upward breakout or downward breakout. But if the momentum is not strong, then I have what we call false breakout. So you have two types of bullish breakout: strong bullish breakout and false breakout. Strong bearish breakout and false breakout. So these are what form some of the terms and terminology we are using. Now, remember that drawing this thing is subjective, as we said before.
Yeah.
But now, if I look at this chart right now and I says, okay, I want to get an intention of the buyers, an intention of the sellers. What is the intention of the buyers right now? They will break a particular resistance level.
Yes.
Is it not?
Yes.
The intention of the sellers, they will break a particular support level. So from
Yes.
what I'm looking from my screen right now, Then you see here, now you see discover that this resistance level 9 is broken. You see here, look at here. You see this resistance level 9 is broken. Do you see it?
Yes.
So that means that there's a bias intention. But if you look at this market, see that even when this resistance level was broken, the market moved up very well. No, you see that there's also a pullback. Are you seeing it?
Yes.
You see there's a pullback before it eventually go up. But how do you take advantage of this? So this is where we spotted that bias has an intention in the market. Do you see it there?
Yes.
Then from where do they define that intention? From here. Are you seeing it?
Yes.
So I take up this, I pick my channel, and I says, okay, two things. I can do something like this, that this is where the buyer shows an intention that they will go up. This is the support from which they gather the momentum to break this level. Are you with me?
Yes.
So if I don't want to stress myself, I take my Fibonacci tool, pick it from here where the buyers are showing the intention to go up, put it down here. You see what I did now? I've gotten the intention that they want to go up. Then this is where they gather the momentum. So that means that from here to this place is the power of the buy inside this place now. So from this 0 to 100 is like the buy power. Are you with me?
Yes.
So that means that I can take decisions within inside this 0 to 100, then target that if the buyers are actually true from what they say, then they can push to 161. If they are true. Now, if you look at here, do you see the series of war that was going on?
Yes.
You see the series of war.
Up.
You see a series of war that even they want to come and hurt your stop loss. And what are they trying to hurt? To weaken the buyers. But the buyers were all struggling, all struggling. So assuming that this is a daily time frame, you spotted this. You could imagine the how many up and down has occurred inside this. But eventually, and also because this is a function of time. If it's a day, this day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8, day 9, 10. You see, is this saying that you even waited up to 1 month? Assume it's a daily
Yes.
time frame before you eventually come and give you your profit. 161. So using this lower time frame is to print to you what we are saying. There's all these things is happening for every 1 minute. But the beauty you understand that when you spotted this signal again, that inside a daily candle, it may take 24 hours again for it to fully mature. And there's a series of war that was going on there. So now, if you mark this and this, that's where we are now saying our order block, where it's more likely that this bias has more power, okay, to push the
Okay.
market up. So if you look at this thing critically, we have already spotted our 0 to 100 level. Now, your Fibonacci now was able to show you that if from here is 0 to 100, it split it into different levels, which is I have 14.6. Okay, I don't give you this. I give you 23.6. Are you saying it?
Yes.
38.2, 50, 61.8, 76.4, 100, and then
Okay.
161, which is my target.
161.
So then I will say, okay, that now if you look at the history again, go back to if you see the history here from where this breakout occur, do you see your bullish engulfing?
Yes.
Which means that this power that pushes up, this is the base of the power, which is this bullish engulfing. So that means that you want, if the price should come inside this bullish engulfing, how do your market define your bullish engulfing zone? From 0 to where? Look at here now. To 50%. I seen it.
Yes.
Your bullish engulfing started from 0 here up to this level. Or if you check where the bull closes, which is the power of the buy, it closes at 38.2. Are you saying it? Because where this bullish engulfing close is almost above 38.2. Are you saying it?
Yes.
Yeah.
So what does it tell you? That this buy order, that this is where the big boys initiated a strong buy order that take this market up. So what did they do? Because they created these buy signals So a lot of people now will start jumping here. The market is going up. The market is going up. I see they jump. You see now they jump outside your range, which is 100.
Yes.
What did this guy do? They that created this buy signal and push this market up, they take their profit because they want to make more profit. So they book their profits. And when they book their profit, what happened? So some people are trying to put more buy orders. So those guys will wait for, says, okay, this is where we initiated our order with a tight stop loss. So their massive profit they take is also to bring the market back into this buy order zone again so that they can initiate another buy order. And that's why when you see there's a shift towards that buy order and you get another bullish engulfing again inside that place or strong pin bars, hammers, it confirms that these guys are willing again to initiate another buy order with a tight stop loss because that's one of your requirements, tight stop loss. So you see that they succeeded again, they push the market again, and they're able to push it to the target. So they are done. Are you seeing it? So
Yes.
you see that if this is what you are looking at for, once you spot it, then you are good. Another person can do that thing with this thing we did here again. Somebody can say, okay, I want to capture it like a form of channel.
Yes.
He can say, okay, this is where he spotted the breakout. Are you with me? So you see that all these things are arbitrary because no, he says, okay, this is when they spotted this buy order, the market went high here and pulled back. So you can say this is the highest high. It takes his this thing and do like this and applaud this. And he plotted this. You see what he did again?
Yes.
Says, okay, you see now look at this breaker. See that market when we break out, it was bouncing back to the channel, but eventually move out and move up. You see another frustration here again.
Yes.
And eventually market went to that person's distance. So these are arbitrary of how you do it. You're able to capture the market in a channel, so eventually break out of the channel. So the question now is that which one do you prefer? Is it to trade market in a channel form or to trade it in a support and resistance form while you deploy your Fibonacci? But remember the secret, the fundamental secret is that evidence you've gotten that buyers are going to take the market up, which is basically the break of structure. Are you saying it?
Yes.
That's the break of structure. Because if you look at here again, you see again that even despite the sellers are injecting orders, but you see that this one, you see again, there's a break of structure here again. Do you see it again?
Yes.
There's an indication that the buyers are willing to take the market up.
Mm-hmm.
So what do you do again? Even if you identify here as a break of structure, this is the lower low from which this break of structure happened. So what do you do again? You can take your Fibonacci again and says, okay, this is the low and this is the lower low. Then if you look at this place again, see that this place now, before this breaker, see there's a bullish engulfing here. Are you seeing it?
Yes. Yes.
Where does the bullish engulfing close? Where is the level here? Bring out at 61.8. Are you seeing?
Yes.
You see again that this break of structure was able to hit all your first targets. You see they hit the first target again. You see what the guy did? They start taking profit again, back into that other block again. We have how many minutes we have left? Okay, we have 9 minutes. So you see again, do you see again? They push it back here again. Then initiated another buy signal again, and they take it back to your second signal. You see that looking at it again, it looks like 1 minute is also tradable. Am I communicating?
Yes, you're.
Okay, look at here. Let's look at the one that failed, though, because when we're talking about the one that passed, we can talk about the one that failed.
You did.
Do you see there's a break of structure here?
Yes.
Yeah, there's a break of structure there. Yeah.
So what do you do? If you take a Fibonacci and measure this break of structure, you see now, you see that market did not reach the first target I see. I see there. Then
Yes.
remember that this is your buy zone. Then if you look for the bullish engulfing there within this zone, you see the pin bar here, which is almost at 50%. I see it. So if you decide that this is where you're going to buy the market, you're not doing anything because you already have in mind that these guys may likely start taking profits outside 100 again. You see the candle that come into your zone came with a strong movement. So it does not qualify this signal again. I see it. So
Yes.
the book they book profit and also mop up stop losses of people here. So it doesn't qualify again. So what do you do again? You can start looking for another break or structure. We already explained this one. And then this one again. Well, let's be looking at the one that failed again. You see there's a break or structure here.
Mm.
So this is from low to the high that lead to this break or structure. You take your Fibonacci. So you see that's why using your Fibonacci becomes a very easy tool to use. I see. So if you look at here again, from this way, you see your bullish engulfing here. So you're saying that when price come inside this place again, you can buy. You don't buy on 100. Remember, they wanted to buy with a tight stop loss. You see, when they push to 100, confirm that breakout again. They start taking some profit. You see inside this place again, you see another bullish engulfing. Do you see it now?
Yes.
So we should take your buy decisions, maintain the stop loss. The market went to 100. You have made some profit here, and the price could not push up again. What happened? They came with speed and then violate your stop loss. So they make this one now not valid again. I seen it.
Yes.
So now what does that mean? That so you see that sometimes when you take your this thing and you are in profit and price maybe move to 76 or 100, if you are still projecting to 161.8, you can take your stop loss and put it at your entry. So that if anything goes wrong, your capital is intact. It's only the gains you made that you lost. Am I making sense? You can
Yes.
even take your stop loss and maybe secure like maybe 2,000 or 3,000 or 5,000. So you will not put it against the next level. Maybe as you now entered on 61.8 here, and the market now has gotten to this 100, we can take our stop loss and place it maybe slightly above 61.8. That if it's moving, we move to 100, so it can hit our tape. But if it goes against, it will hit our stop loss at 61.8. So maybe 2 or 3,000 naira. So we didn't suffer any loss. I don't know if you understand what I mean.
Yes.
So that was it. So if we go back to 1 hour, the same thing we are saying. If you go back to the same 1 hour, then what happened again? You see that here again that when you buy, let's look at break of structure. We can take one here. You see here, you see there's a break of structure here. Do you see it?
Yes.
There's a break of structure here.
Hmm.
So if this is a break of structure, so you pick the high of this candle to the low to do your Fibonacci, because as you take the level that was broken to plot your Fibonacci. I don't know if that is clear, or should I? So how do you plot your Fibonacci? That level that was broken
Broken here. Take the high and the low.
and
For the previous.
then so if this is our order, so we call it your order block.
Okay.
You see the break of structure here now. You
Yes.
see it now. You see that after this break of structure, you see that market now pull back. So remember that your break of structure, you can call it wave 1, then pull back
Okay.
wave 2 into your order block. Then wave 3 is to go to your target. So break of structure wave 1, then you have to get wave 2, pull back. And the rule, if you are studying Elliott wave, see that wave 2 should not violate the low of the where your stop loss is. So if you violate it, something wrong. So it's a market now pull back here. I seen it.
Yes.
And when you pull back again, you see that this pullback even give you a strong bullish engulfing here, which even if you take a decision here, your stop loss could be here on that wave 2. See, market now moves into your target 161. I seen it. Now, when this 161 happen again, see there's a massive profit taking again back into your order block again.
Yeah.
You see that there's a strong buy order again, push it back to this, up to this 461, which as when you're holding your trade will reward you massively. So you see that this setup is already completed at this point. So if you take it out again on the next day, if you put period separator, this is a period separator.
Yes.
So if you put period separator, so you can use it to be tracking on daily basis, maybe because the other one that happened is a history. It's a history. So for when the market open, you can either use the previous history or the current day and take a decision. Now, if you look at here again, see that this market is forming fractal resistance, fractal resistance. You see break of structure. Okay, you see break of structure here now.
Yes.
You see, because this
Yes.
resistance level is broken. So is it that this now what you are doing is a simple something. You are not stressing yourself. You're looking for that buyers are willing to take the market up. So you draw your this thing. And what the beauty part of it is that if the buyers are actually serious, so the market they will show you the target, which is 161 extension 200. As simple as that. If they are serious, when they break a structure, they are serious. They will try to extend it to, because it shows you the power of their movement, that if they're actually serious, because this is like 100% again. Extension 200 means that from here to here is 100, from here to 200 is also 100. So it's an equal movement. Action and the reactions are equal and opposite. So this is 100, is it not?
Yes.
So if they're actually serious, they will take it to 200. That's the extension. But the one that is more guarantee is what?
161.
161 is more guaranteed. Remember, you can still get 138 too. You can get 150, but it says 161. I see. So this is like sure in most cases. Try pull back again. So it's like a natural phenomenon that if you extend your hand upward above your head, it will get to 161. It's natural. So if this breakout is true, I see it. See, now look at this breakout. See, market pull back to where? To 76.4 and pick some orders again. Form another bullish engulfing again, push it to 161. You see, you are done. So you are not making your matter complex. What you are saying is that once I spot an early buyer's intention to break out, I will target 161. So if it's not there, there's nothing. Why I'm saying all those things is that it will help you to narrow what you are looking at in the market and what you are following. Because, okay, look at here again. Okay, this is what we did again. Assuming somebody spotted, you see there's a break of structure here now. So where do you plot your Fibonacci? You plotted your Fibonacci here. This is the level that was broken. Then this is the lower low. You see that this break of structure went straight to your target. I see now. Now
Yes.
you are waiting for it to pull back. This one, are you like a mixed opportunity? You see it? It did not pull back again, consolidate. Then what happened? So maybe if you're watching the market, maybe you are taking this decision. Market has formed a fractal here, telling you that you can place your stop loss here. I seen it here now.
Yes.
When this one is happening here, the fractal appeared because this is the fifth candle that formed this fractal. So it's showing that this market are not willing to come back, that momentum is still strong. So you can even take a decision here, place your stop loss. You see your stop loss is very tight. You see it very tight again. The market rewarded you up to this again. So it showed that